Hello everyone, welcome to the webinar. I'm just getting started right now, so just give me a second while we set up, and then Jasmine will begin the presentation in about 5 minutes, give or take. Hey everyone, we're going to begin in 1 minute. We're just going to give some time for other people to join. So in 1 minute, we're going to get started. Okay, everyone, welcome to the next webinar in our home buying webinar series. This one is mortgage approval process, the basic principles of processing and underwriting. And again, we're going to have Jasmine, our wonderful mortgage expert, to go over everything. But before we get started, I wanted to go over some webinar resources just so you know what's available to you. At any point during this webinar, feel free to ask questions. On the right side of your computer or somewhere on your computer, you should see a prompt for the GoToWebinar, and there's an area for questions. At any point, you can ask questions, and at the very end, we have an entire time dedicated to a Q&A section. So we will have every question answered, and if we don't get time to answer your question, we will make sure to email you. But feel free at any time during this presentation to ask questions. Attached, there should be a couple of handouts that are available to you, some guides for a home buying process that might be of value to you, so definitely check those out. I don't think we have any polls in this webinar, but in the future, we will be adding polls. Those are really fun. And then, of course, like all other webinars, you will get a recording sent to you after the webinar concludes in an email. And then we're also going to be uploading them to YouTube, just in case you want to review something, or if you missed something you had to get up, don't worry, you're going to be sent this webinar after the webinar ends. And then lastly, I want to introduce today's presenter. Jasmine has actually been doing this for the past 3 or 4 webinars now. So it's, with great honor that I introduce her. She's been doing mortgage stuff for a lot of time now, for about 12 years now. I'm not going to go through her entire bio like I do every single time. Just know that she's an amazing mortgage expert, and everything she's going to talk about today is only value packed. So hopefully you can get some value out of this. And again, if you have any questions, feel free to ask it at any point during this presentation. And with that, I hand it over to Jasmine.
All right. Hello, everyone. Thank you for joining us today. I'm so happy to have the privilege of presenting and educating all of you. Again, as Brian mentioned, if you have any questions in the interim, please write them down so that at the end I can answer any and all questions that you may have. We're going to jump right into it today because we do have a lot of items to cover, and I want to make sure that I go into the presentation in detail. Again, just in case you do have any questions, I can answer all of them at the end as well. So today's agenda will include taking the right steps to be able to become mortgage ready. We're going to discuss what are the common types of mortgages, the length of the loans, choosing your mortgage, what is a conventional mortgage, what's included in a monthly mortgage payment, and at the end we're going to discuss future events as well as questions and answers. Now, while looking for a mortgage and looking for a home, they're both very important items to do at the same time. And while you are attempting to look for your perfect home right away, there are a few steps that you need to follow before you can start shopping around for a home. There are things that you do have to consider. So taking a look at the picture as a whole will definitely help you process a stepping stone so that you're able to accomplish your goal. So the first things that we're going to do, we're going to begin by determining how much you're able to afford based on your spending plan and comfort level. One of the first steps should be to talk to a homeownership educational counselor. We have partnered with 2 great HUD counseling agencies. One is called GreenPath, the other one is Navicor. They can both help you learn the home buying basics and evaluate your financial readiness. Now, the reason why we recommend for you to speak with a HUD housing counselor is because although you and I go through your finances and I can advise you and tell you, you can probably qualify for a mortgage payment of, let's say, $2,500, depending upon your gross income, you can say to yourself, well, although I can qualify for $2,500, but my personal expenses that are not included in my credit report reflects that I can really only afford a $2,000 mortgage payment. Okay, so I can give you a pre-qualification amount and tell you about how much you're able to afford, but think about this. At the end of the day, you're the one who's going to be signing off on the mortgage and paying it off for the next 30 years. So there are a lot of things that come into play besides just the full mortgage payment itself. So The things to consider when shopping around for a mortgage and when you're serious to sit down and say, you know what, I am determined to purchase my home within the next, let's say, 2, 3, 6 months to a year. Navicore Solutions and GreenPath can definitely help guide you so that you can also achieve homeownership goal. Again, their job is to be able to prepare you, to come up with a budget with you, a realistic budget depending upon your case scenario today, and a proposed budget. They'll be able to pre-qualify you. Take a look at your credit report. They do run a soft pull on your credit report. It will not negatively impact you because they're not a financial institution. So it's important for them to pull it because they'll be able to advise you what your credit score is, your FICO score. Because depending upon your FICO score is where I will be able to determine what's the best interest rate for you, okay? So we take a look at your credit history, so do they, your monthly debt, your monthly employment income, your assets, collateral, most importantly, your credit score. At Greater Alliance, the minimum credit score requirement is a 620 for a conventional loan, okay? Now, the step-by-step mortgage guide, okay, and steps that you should consider and follow just so that we're all, on the same page and you can take a look at what we look for. And when you're shopping out there, you should take a look at a few other things too to be able to consider so that you can maybe steer away from. One of the things that I always recommend to steer away from someone that claims that your credit problems won't affect your interest rate, that is incorrect. If an offer is really appealing, get it in writing and seek a second opinion, okay? Shop around, talk to several lenders. A mortgage loan product or lending practice may seem reasonable until compared with another similar mortgage loan product offered by other lenders. Now, if you're looking to shop around, and let's say, for instance, you're not too certain if a mortgage service or a mortgage lender is right for you, you have to do it within a 15-day window, okay? It's very important for you to do it within a 15-day window because while you're shopping around, all these lenders are going to be pulling your credit and your credit score is going to go down. However, if you do it within the 15-day window period, your FICO score is not as negatively impacted because all 3 credit bureaus are going to see that you're just shopping around. I'm not promoting that you go to 10 different lenders within that 15-day window. What I am saying is that if you're not certain about one mortgage company, maybe you can visit 1, maybe 2 more, but no more, okay? Because again, every time you have a mortgage servicer pull your credit report, your credit score will go down. Find out about prepayment penalties. Know if a mortgage loan offered to you includes a fee if you pay off your mortgage early. You may want to ask about other products that do not contain a penalty. So the reason why we included this in our presentation today is because I always promote trying to pay off the loan sooner rather than later. You don't want to be stuck in a mortgage for 30 years. I always promote maybe paying an extra payment per year so that you can shave off between 3 to 4 years from your mortgage, okay? So it's very important for you to always find out if whether or not there will be any prepayment penalties because you don't want to be stuck in that type of predicament where you're being proactive and paying off the mortgage sooner rather than later to benefit you and pay less interest, and then at the end of the day, you having to pay a prepayment penalty. And also make sure that documents are correct. Beware of anyone offering you to falsify your income information to qualify you for a mortgage loan. Never falsify information or sign any documents that you don't know or that are blank or seem to be false. Because if you do sign any of these documents, just be aware that if they're falsified, you don't know if whether or not in the long run they can come back and maybe include an added feature to include prepayment penalties or just be a faulty loan. Just make sure that whenever you enter into a mortgage loan agreement that you enter it the right way so that it can end the right way as well. right. So the step, so if you're not sure, again, just please, don't sign anything. Get advice from a reputable consumer credit counseling agency or a HUD housing counselor. Make sure the documents are complete. Again, do not sign any documents that have incorrect dates or blank fields. Be wary of promises that a professional will, quote unquote, fix it later or fill in later after you've signed. Okay, just make sure that there's a big X if there's a blank paper, and all of the boxes are checked off that need to be checked off. Okay, ask about any additional fees. Make sure that you understand all of the fees that are part of your mortgage process. Question any items that you didn't request or don't know about prior to the time you're asked to sign the mortgage loan documents. Okay, you have to understand the whole entire package because, again, you don't want to sign off on something that will later on hinder you. It's your signature. So your signature is what's going to bind you to any product that you sign off for in court. Okay, understand the whole package. Ask for written estimates that include all points and fees. Compare the annual percentage rate, the APR, which combines the loan's interest rate with certain other fees charged by the lender or at closing and over the life of the loan. So let's say, for instance, you qualify for a loan and the interest rate right now is 4% and with us, and the APR is, let's say, 4.125%. And you go to another mortgage servicer and they offer you the same 4%, but their APR is 4.9%. So although you see that the interest rate with your current rate is, let's say it's 4%, we both have the same 4%, but with the other lender, you're going to be paying more because the APR is higher. So always compare not only your interest rate, but also your APR. Work with legitimate credit counselors. Be aware of scam credit counseling and credit consolidation agencies. Get all the facts before deciding to combine credit cards or other debts into a mortgage. There are a lot of attorneys that say, you know what, if you pay me a retainer fee of $2,000 and then a monthly fee of $100 to be able to fix your credit, be very leery of them because, again, they're not going to work to your best interest because they're going to want to continue to collect that residual monthly income of $100 a month, and no one is going to be able to protect your credit or build your credit like yourself. You can take that $2,000 retainer or that $1,000 retainer and that monthly $100 and use those funds to be able to fix your own credit and pay off those debts that will be completely paid off, and you know that you're working on your credit yourself and you know what the outcome will be in the very near future. As far as the credit counseling agency, always refer back to the Better Business Bureau and confirm that they are a legitimate HUD housing counseling agency. Okay. So always got advice, like I mentioned before, from a reputable consumer credit counseling agency or HUD housing counselor. Understanding the people and their services. Okay, you're going to know who's who and what's what. All right, so we're going to start off by knowing, who is the loan officer. The loan officer are the mortgage experts. They're the ones who are going to try to figure out if whether or not you qualify for a mortgage and then come up with four mortgage financing options for you. Now, also the loan officer will advise you of any programs, any down payment assistance that may be available to you. The loan officer will also help guide you, let you know what type of mortgage products you're eligible for depending on your credit and your savings, as well as down payment assistance, and help guide you. So you're going to be speaking with the loan officer and the real estate professional. Those two are the most important people in this transaction because the real estate agent is also going to help guide you and find the home. So the reps can help find the kind of home you seek, examine the comparable homes, and compare different neighborhoods. They will also help you find a home that meets your needs and will handle the negotiations with the seller. Okay, the loan processor is another very important piece to this puzzle. They are the ones who prepare your mortgage loan information and application for the presentation to the underwriter. Okay, so they're the ones who order the appraisal. They're the ones who make sure that they collect all of the documentation, 30 days pay stubs, 2 years taxes, and so on and so forth. So once the package is complete, then they send it over to a mortgage underwriter. They're kind of like the judge, all right, because they're the ones who underwrite the loan. They're professional and they're authorized to assess if you are eligible for the mortgage loan you're applying for, and so they're the ones who will guarantee and issue out what's called a mortgage commitment, which is when they can guarantee that the mortgage is ready to go. All we're going to need is the closing date thereafter. So the mortgage underwriter is very important because, again, they are the judge. The real estate appraisal is the real estate is the one. Their job is to look at the property you're purchasing and determine how much it's worth or fair market value. The reason why they're so important is because we will only lend whichever price is lower, whether it is the appraised value or the sales price. So whichever one is lower of the two is the amount that we're going to be able to lend you. Okay, and because let's say, for instance, there's a property that's going for $300,000, and so we go ahead and we prepare all those documents for a loan for $300,000, but the appraiser goes in and says, well, you know what? This property is really worth $250,000. Guess what? We can only loan you $250,000. Okay, so that's why the real estate appraiser is so important. All right, so what are the things that you should know about your mortgage application? Okay, there are various sections in the mortgage application that will help explain what type of a member or what type of a loan you will have. The first part is section 1 will just give us a description, a type of mortgage and the terms of the loan. Sometimes a member is interested in obtaining a 15-year mortgage or a 10-year mortgage or a 30-year mortgage. So this will basically give me the description, okay? It'll also tell me the type of mortgage. Is it an FHA? Is it a conventional loan? Okay. Section 2 will give me the property information and the purpose of the loan. Okay, so the property information meaning the address of the property that we're going to either purchase or refinance, and the purpose of the loan. Is it a refinance cash out? Is it a purchase? What's the purpose of obtaining this mortgage? Number 3 is the borrower's information. So just basically your personal information, which is your name, phone number, social security number, date of birth, so on and so forth. Section 4 will tell me your employment. Do you have 2 years at your current employer, or where were you working at before? How long? What's the name of the company, their address, their phone number? All right, Section 5 will give me the monthly income and combined housing expense. So we base your mortgage dependent upon your gross income and your housing expenses. Section 6 will tell me the assets and your liabilities, meaning do you have a 401k? How much money do you happen to have in checking or in savings? And it will also show me your liabilities, meaning what do you owe? How many vehicles do you have? Is it an installment loan? How many payments you have left? What's the balance and what's the minimum payment that you're paying out each and every month? Okay. Number 7 will give me the details of the transaction, meaning what it's going to cost you to be able to purchase a loan. At the end of the day, like at the closing table, how much you'll have to bring, okay? And it'll itemize everything there for you. The declarations and will be on Section 8, meaning if there's any bankruptcy, any judgments against you, any collection activities, anything that's going on in court, if let's say, for instance, you're in arrears with your child support. So we're going to have a lot of information on Section 8. Section 9 is the acknowledgement and the agreement that we're going to move forward with the mortgage. And Section 10 is government and monitoring information. So for HUD statistics, we have to ask, what is your ethnicity? So that's Section 10 of the application. So moving forward, we're going to break down important documents. This can get complicated, so if you have any questions, please do not hesitate to ask, okay? So some of the important documents to complete your application may include information regarding debts like other loans, okay? We're going to take a look at your W-2s, forms for the past 2 years. If you're 1099, then we're going to also ask for the past 2 years of self-employment personal tax returns and business tax returns. We're going to ask for 30 days pay stubs, the most recent pay stubs, that is. If you receive pay, let's say, for instance, every other week, then we're going to require 2 pay stubs. If you receive pay once a month, it's just 1 pay stub, okay? We're going to ask for the most recent bank statements from all of your accounts showing where you're going to come up with the down payment. So if you have, let's say, for instance, 2 accounts, and you're going to send me the bank statements, and the bank statements for both accounts say that you have 8 pages. You have to make sure that you send me all 8 pages. Even if the page is blank, all we want to see is that page 8 on top of that blank page, okay? We will ask for tax returns for the past 2 years. Like I mentioned, if self-employed, we're going to ask for business and personal, as well as proof of any supplemental income, okay? So supplemental income may mean, let's say, if you're receiving child support, and the child is up to the age of 15 years, we're going to have to take a look at the documents from the court showing how much you were awarded each and every week, and we're going to have to show the deposits being made on a constant basis. Okay, so those are the items that we're going to be asking for when reviewing you for an application. Understanding your costs through estimates, disclosures, and more. This is very important. Again, it's only because you're going to want to compare, okay? Once you have completed the mortgage loan process, your loan officer will provide you with a variety of documents outlining the costs associated with the loan. This way, you don't enter into this mortgage blindly. The most important disclosures are the loan estimate and the closing disclosure. These forms are required by law and are there for your protection. The loan estimate is provided to you within 3 business days of submitting the application, so your loan officer must provide you with a loan estimate. So usually what happens is that when you submit an application, your loan officer will review all of these figures while submitting the application, okay? And as soon as you receive that pre-qualification letter, again, you will also have that information at your disposal. The loan estimate is a 3-page form with a summary of information of your loan terms. When you hear the word terms, that means basically all of the information that pertains to your mortgage, the amount of years it's for, whether it's conventional, FHA, interest rate, and so on and so forth. The monthly payment will be included in the loan estimate, so this way you have an idea of what your payment looks like, including principal, interest, taxes, homeowners insurance, and mortgage insurance. And money needed at closing is all going to be on the first page. It'll be the details of your closing costs, and on the second page, any additional information about your loan will be on the 3rd page. So these are items for you to definitely watch out for so that you're able to compare and contrast. Okay, so let's talk a little bit more about the loan estimate and what it includes. The loan terms, this section defines the basic terms of your mortgage loan, including the initial loan amount, interest rate, and initial monthly payment. This section also includes important information indicating if your interest rate can rise and if your loan has a prepayment penalty. The escrow account information is a document that most lenders require you to pay in advance for some items that will be due after closing. These prepaid items generally include homeowners insurance, premiums, and property taxes. The first page on the loan estimate indicates whether or not an escrow account is required and estimates the amount of your monthly escrow payment. And closing cost details. It tells you the original charges and fees charged by your lender for preparing and submitting your completed loan application and underwriting your loan. And the origination charges can include an application fee, an underwriting fee, and services you cannot shop for. Lists the fees for those settlement services for which the lender will select the person or entity that will provide those services. So just to give you a little bit more of information with regards to the closing costs here at Greater Alliance, we don't charge you application fees, origination fees, underwriting fees, lock-in fees. So our closing costs are typically between $3,000 to $6,000 less than any other mortgage company. All right. So items that you cannot shop around for is typically the title. You can't shop around for title. You can shop around for title, but their fees are always going to remain the same. Okay. So just as an FYI. Okay, other costs include tax and government fees, such as recording fees and taxes and transfer taxes. So once the loan is closed, we have to send your mortgage note and deed to the county to record that you're now the new owner. Okay, also prepaid items includes homeowners insurance premiums for the first year of your loan term, prepaid interest, and property taxes. So before you close, you have to pay for 1 year homeowners insurance. And the reason why you will have to pay for 1 year homeowners insurance is, although it will be included in your mortgage payment in escrow, is because, let's say, for instance, if you close July 1st, 2019, you have to pay for the full year up front, because come July 1st, 2020, let's say State Farm is going to say, hold on a second, you owe us $1,200. So every month from July 1st, 2019 up until July 1st, 2020, we have to collect $100. So that once July 1st, 2020 comes due, we have the $1,200 to pay State Farm. Okay, so that's why that has to be prepaid. Initial escrow payments at closing, which generally include 2 months of homeowners insurance premiums and property taxes. And that's basically because every year, like in November, we do ask the county, we send an email over for an assessment to see what the property taxes are going to be the following year. And we have to have some money in cushion just in case the property taxes go up. Same thing with the homeowners insurance. If you file a claim, your roof went wrong and there's repairs or there's a flood, your homeowner's insurance is going to go up. So we're going to have some cushion in escrow to be able to pay for those kinds of costs. Appraisal fee, the fee paid to the professional appraiser who will assess the value of the home you want to buy. So that's typically another closing cost that you will have to pay for. Title insurance fees. The fee to search county records to make sure that the title to the property you wish to buy is clear of free of any complications. Title insurance is very important because you want to buy a property that's free and clear of any liens. So that means, sometimes people, the seller who currently has the property on the market goes to Atlantic City, and let's say, for instance, they blow $50,000. They will need to put a lien on the property for $50,000 because they owe Atlantic City, let's say, that amount of money. Or let's say, for instance, home repairs were made and the contractor wasn't paid. So they will take you to court, and let's say the judge awards them a judgment, they can also put a lien on the property. So you want to make sure that the title company gives you an insurance stating that the property is free and clear of any liens that no one is going to come after you for a lien that was placed on the property 100 years ago. So that's why title insurance is so important. Government reporting fees are the fees required to register the property under your name and record the mortgage and deed of trust. Okay, so you want to make known that this is your property to the county and you're liable. And let's say, for instance, if you decide to sell the property, I mean, this gives you the ownership of the property. And the initial deposit for your escrow account. This represents the money that you are required to pay in advance to establish your escrow account. Okay, so these are other costs to watch out for on your loan estimate. Closing disclosure, okay. At your closing, you will receive a closing disclosure form that lists your actual loan costs. Compare the charges on the closing disclosure with the charges on the loan estimate to ensure that they have not drastically changed. So you can compare the documents that's provided to you from inception, right, from your loan application to the closing disclosure that you will receive 3 days before closing, okay? These disclosures reflect the most significant characteristics of your mortgage loan. Number one, the APR, which is the annual percentage rate, the payment amount, and the total interest percentage will be included in there. Now, let me give you a brief definition of what each and every one of those items are. The APR is not the interest rate for which you apply. The percentage rate takes into account the various loan charges, including loan discounts, origination fees, prepaid interest, and other credit costs. That's why I'm really honing in on the APR, because a lot of mortgage servicers and lenders have a very high APR rate. The proposed payment amount shows the dollar amount of your payments and their frequency, and the TIP, the total interest percentage, is the total amount of interest that you will pay over the loan term as a percentage of your loan amount. All right, so other disclosure documents include the commitment letter. After your lender has approved your mortgage loan application, you should receive a commitment letter that specifies the amount of the mortgage loan, the number of years to repay the mortgage loan, the interest rate, the APR, and the monthly charges. So the commitment letter is typically provided to you about a week or two before closing. This is the commitment that we're going to lend you this money so that you can buy a home. So this is what realtors look for and attorneys, just to confirm that the loan is actually going to go through, that they've already passed the process, the processor's hands, that the appraisal is okay, that the inspection came through without any problem. So a commitment letter is very important. The appraisal disclosure, this is a document that will inform you that you have the right to get a copy of the appraisal report that was obtained in conjunction with your application for the credit. So you're going to have the option of choosing if whether or not you want a copy of your appraisal. Just as an FYI, you always want a copy of your appraisal, okay? The occupancy disclosure. You will also be required to sign a disclosure stating that you intend to actually occupy the property as your primary residence, that you will live in the property the majority of the time, so maybe 6 months out of the year, as opposed to using the property as a second home or as an investment home, okay? So those are one of the other documents that you have to watch out for, and the credit disclosure. There are a number of other disclosures that will be given to you, including a disclosure about your credit report and your right to be able to obtain a copy. Now, the final document before closing. You are almost at the end of the mortgage process, but there's still a little left you need to do. And the reason why I say that is because when you receive the mortgage commitment, you will, in the mortgage commitment, there are also going to be other stipulations that you will also have to comply with in order to be able to get you to the closing table, okay? So again, it's just a little bit more that you need to do, but you're almost there. Know how much you will be paying this document discloses the actual dollar amounts you will pay for the various fees and services associated with the closing of your mortgage loan. So just be very mindful of that. The closing disclosures are list and date of the closing, so that's another thing that you will have to be prepared for. Now, in essence, you're not the one who's going to choose the closing date. Typically, the settlement agent is the one that chooses the closing date because the loan has to be cleared to close. So it's the settlement agent and the mortgage company chooses the closing date, only because it has to be cleared with us before it actually you can get to the closing table. So in many cases, the closing can take place in either at the title company or at your attorney's office or at the real estate agency. So, or at a Dunkin' Donuts. I've seen it happen there as well. But you get to choose that. You get to choose the closing place. Okay. Now, the escrow officer is an important third party in the transaction who will be able to answer general questions about the terms of your mortgage loan, but they won't be able to give you legal advice. So the settlement agent is typically your title company. So they're the ones who check off all the boxes. They're the ones that collect all of the documents from everyone. So that includes making sure that the appraisal is going to be paid for. How much is that? So they're the ones who are going to balance. They're the accountant, in other words. So they're going to ask for the settlement fee, like your attorney's fee. They're going to ask for the title fee. They're going to ask the county for the water bill, for the tax bill. They're the ones who are going to put together the interest, the prepaid interest that you're going to have to pay depending upon the date that you are going to close. So they're, in other words, the accountant, okay? Now, if you have any questions, always refer back to your settlement agents because they're the ones who have the final figures, okay? Now, getting ready for the closing. You're almost at the end, but there's still some things you'll need to do. What are some of the other things that you will need to do is the final step to homeownership. You and your family are, that's when you're finally ready to move into your new home. The mortgage loan was approved, your house passed inspection, your belongings are packed, and everyone is looking forward to moving day. All that's left is to attend your closing. So, another FYI, so I do always recommend a day before or the same day of closing, always do a walkthrough just to make sure that everything that's in the sales contract and that was promised to you is still there. So if you negotiate that you want the chandelier to be included in the loan, in the home, that has to be there. Let's say, for instance, the same day of the walkthrough. If you want the washer, the dryer to be there, you have to make sure that they're there a day before the closing as well. So just make sure that all of the items that were promised to you are still there the date of the closing, okay? What is a closing? A closing is a meeting that involves all of the parties signing the final documents and legally transferring the property over to you. There are costs and fees in the final step, which you will need to be aware of. This section will walk you through the entire process. When you're finished signing the closing documents, you will be given the keys to your new home. Congratulations, the mortgage process is now completed and you are now officially a homeowner, okay? So who'll be there? Usually the closing takes place at the title company, like I mentioned, or escrow. The following slide will outline the individuals who should be there or be represented. So you, of course, will be there, and any co-borrower that is also on the mortgage. The escrow officer will be there, the closing agent, the seller's real estate agent, and your real estate agent will also be there. Now, you are going to then sign what is called a promissory note. This is the promise that you're going to pay the mortgage every first of every month for the next 30 years, right? So you will sign a promissory note indicating that you have accepted the mortgage loan from your lender and agreed to repay the amount borrowed plus interest. You will also sign a security instrument, which pledges your home as collateral for the loan. In some states, this document is a mortgage, and in other states, it is a deed of trust. Okay, so the promissory note is just basically securing the instrument because this is a secured debt. Okay, it's not like a credit card debt. So at that point, there will be a money transfer. At closing, your lender will transfer the money to the seller on your behalf. The seller will then sign a document called the deed, transferring ownership of the property to you. The settlement, the title or company or settlement agent. So again, I just talked about that a few minutes ago. That's the title company or settlement agent will prepare all of the documents and make sure that they're all properly recorded. Okay, making sure that this new property is in your name. And you will also sign additional affidavits. And that's where there will be a number of affidavits and declarations for you to sign. These legally binding documents spell out the financial obligations you are taking on and your rights as a homeowner. You just have to make sure you understand what you're signing. It is important to read the documents carefully. Don't just sign to get it over and done with because you're so anxious to be able to get into the property. Remember, what you sign is something that's legally binding you, and this is something that they can use against you in court. So make sure that when you sign a document that there's a signature, that's your signature. Make sure that you know what you're signing. Okay, and this pertains to each and every document. And if you don't know what you're signing, have the settlement agent explain it to you. And then once you understand it, then you sign. There's going to be a lot of documents that you will have to sign. Just make sure that you read each and every document, or have it, just make sure that it's being explained to you and you're reading through it to your best ability, and then you can sign it. Again, ask questions, always. Now, affidavits and declarations, okay? Number one, the mortgage note. So the mortgage note is a legal document that provides the evidence of your indebtedness and your formal promise to repay the mortgage loan according to the terms you've agreed to, okay? The affidavits and declarations are statements declaring something to be true, like the fact that the property will be your principal place of residence, okay? Number three, mortgage or deed of trust is a security instrument that you give to the lender that protects the lender's interest in your property. And mortgage or deed of trust, when you sign the mortgage or the deed of trust, depending on the state where you live, you are giving the lender the right to take the property by foreclosure if you fail to pay your mortgage according to the terms you've agreed to. So, in the state of New Jersey, once you fall 3 months behind, that's when the initiation to foreclosure begins, okay? So that's when the attorney fees gets accrued, court costs, legal fees, and so on and so forth. So just know that once you reach that 3rd month mark, then we can initiate the foreclosure, okay? And that's what the mortgage or deed of trust will indicate to you. Now, a summary of useful tips, okay? The closing process can be stressful because all of the paperwork you would need to sign. Just remember these few steps. Avoid feeling rushed by reading all of the documents that will be sent to you prior to this meeting. So make sure that you obtain a copy of, documents that you're going to be signing, or just be sure that you're ready with everything. Speak to your title company or your settlement agent and make sure that if they can send you some information a day or maybe a day or two prior to closing so that you can read through it carefully. Okay, so just be ready with any questions or concerns that you may have so that you can address it at the closing table. Ask questions, please, please, please. If you don't understand something, please ask the question. Don't be afraid to ask questions, as you need to ensure that you clearly understand the process and the paperwork, because remember, this is the biggest investment that you'll ever make. It's a lot of money that you're financing, so you want to make sure that you're doing the right thing. Universal documents. The document in the mortgage process are the same for everybody, regardless of the ethnic origin, language, gender, or income. Okay, so all of the documents will be the same for you, just as well as a jumbo loan or any other types of loans. And be happy. The day you close on your new home will be one of the most rewarding experiences of your life. So those are the best tips that we can give you while you are going through the closing. Now, let's talk about the final webinar for the summer. We will have one more webinar, and it's going to be detailing why do you need a realtor, what are the steps that the realtor needs to make on your behalf, and what it entails, who pays the realtor, and so on and so forth. It's going to be very, 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 very informative. That's going to take place June 26th, so please, please, please register. Any questions?
So now we're gonna see if there's any questions that were answered. So if you haven't already done so, please make sure you go to the question section that you have on your dashboard, wherever that is on your computer, and ask some questions. So let's see if we have any here. It looks like we do have one. So Jasmine, what do we ask the question? Who do we ask the question? The credit union or different individuals we are dealing with? Who do we ask the question? The credit card. I'm not really sure.
I'm not sure what the question is.
Sharon, I'm not really sure what you're asking here. Who do we ask the question, the credit union or the different individual? I guess who are we dealing with at a credit union when it comes to mortgages?
So if it deals with credit issues, this is what I'm understanding, that it's with regards to the credit, right? So if it has to do with the credit and reestablishing it in a way so that you can become mortgage ready, then you would ask a HUD counselor, either Navicore Solutions or GreenPath.
Another question, how long does it take to finish a mortgage application?
It takes about, when it comes to a pre-qualification, maybe 10 minutes.
Oh, wow.
Yeah.
What can delay the approval process?
Not being able to, when a person does not send over the documents that's being requested. As I mentioned, sometimes we ask for the most 30 days pay stubs. And so I get maybe a pay stub from March and then another one from April. So they're not consistent. Or bank statements. If, let's say, for instance, I ask for 2 months bank statements and I only receive 4 pages out of 8 because you only copied the top pages, then it's a problem. Or you make large deposits. There's cash deposits being made into the account and we're not able to source them. So my recommendation is that if you are going through the mortgage process, avoid making large deposits because they will be questioned. So that can delay the process because we're going to have to now find where did that money come from. You're going to have to show if, let's say, for instance, your mom gave it to you a while back ago and you just deposited cash, or you just received, let's say, for instance, a $3,000 check from your income taxes, and we see that large deposit, we're going to want to see where that money came from. So you're going to have to show your document from your tax preparer stating that that's what you received as a income tax return. So just sourcing the funds will definitely delay the process, or if you don't have enough money for the down payment or closing costs, that can also delay it, or just you yourself not submitting the documentation on time. Sometimes I deal with members that takes them a week to provide me with 30 days pay stubs. And then we have to wait for 3 weeks. Or let's say inspection. Inspection may be another reason. Maybe there's something wrong with the house that needs to be repaired prior to obtaining that certificate of occupancy. So that can also delay it. So there are various reasons to delay it, but if you obtain a pre-approval up front, that can definitely expedite your loan, and we can close in 30 days if there's no problem. Okay, I've closed sooner than 30 days. That's why I do always recommend to obtain a pre-approval from us as opposed to pre-qualification, because that just speeds it up.
All right, we have another question from Marissa. What is the minimum down payment on a conventional loan?
We do have a great mortgage product called Fannie Mae HomeReady, and all you will need with that product is a 3% down payment. So 3% of whatever the sales price would be.
And I think that's it for the questions. I don't see any more coming in. So if you have any questions, in a second, I'll give you Jasmine's contact information. You're more than welcome to reach out to her at any time. I also want to let you know that once this webinar actually concludes, you'll be sent a link to fill out a survey. Please fill out the survey if you have a moment. It should only take you a couple minutes at the most. It really helps us optimize these webinars to make the experience better for everyone, so we would really appreciate that. And on top of that, you do have a chance to win a $25 gift card, so there's some added little bonus there. So again, we really appreciate that. It does help us make these webinar experiences that much better. And with that, that is the end of the webinar. We do appreciate you spending the time and participating. Again, if you have any questions, here is Jasmine's information. There's her email address and phone number. I'm sure Jasmine's always available for that, so feel free to contact her. There's a link down below if you want to schedule an appointment with one of our mortgage experts. You can go to greateralliance.org/mortgage-loans. And of course, follow us on social media. We're on Facebook, we're on Twitter, we're on YouTube, and recently we're on Instagram too. So make sure you check us out and like us and follow us. So thanks again for coming and participating, and we hope to see you in the next webinar next week. Mm-hmm.